Hi, welcome to this video today, which is on the 6th of September. It's Sunday. We're going to be looking at two trade setups today. They're going to be Euro USD, USD CHF. We'll go and take a look at the charts in a moment. Now, we did do a video on these two pairs just over a week ago. We're looking for the USD to have a major trend reversal to the upside. Now, the USD, since our last video, has firmed up a little bit. It hasn't quite confirmed the trend reversal yet, but I think that could come in the coming week. Now, in terms of when we look at the trade setups, I just also want to go through some tips in terms of trading accumulation or distribution in a Forex pair. So we'll go through the tips when we look at the trade setups. Now, in terms of both trade setups, the reason we are so bullish of the USD is due to our favorite smart money tool, the COT net traders positions, which show commercial smart money heavily long the USD while speculators are short. It's a warning sign that the USD can move sharply to the upside. Right, what we are going to do is we're going to go and take a look at the trade setups. But just before we do so, please do keep in mind, it is my view as of this specific moment in time. It can of course change in line with the market conditions and action. If you want all our trading techniques and our daily technical sentiment analysis of 14 Forex pairs, including the two we're going to look at right now, you can click on the link beneath this video. You get live access to our member center. You can also follow us on Facebook and join our Facebook group of traders. Now, in terms of the first pair we're going to look at, it's going to be Euro USD. And before I draw my levels of entry, stop and target, I just want to go quickly and look at the COT net traders positions. Right, on the COT net traders positions, now this chart comes from freecotdata.com. Now, if you're unfamiliar with the COT net traders positions and you're new to our videos, I'm just going to go briefly through how we use them here, but we do have an in-depth video on the positions. I just search our channel for the video COT net traders indicator. Now, in terms of for new viewers, we've got dealers, the green line, that's smart money. Okay, so that's the commercial hedgers. Okay, and you've got speculators, the grey line. Now, what we want to see is smart money, the dealers heavily opposed to speculators. You can see I've highlighted two setups. Okay, here when the speculators really build up a long position back in 2017 and the commercials go heavily short, and you see the euro top out, we have 1,000 pip decline. Now the speculators do drop down their longs, but they maintain that long position, and now they've built it up again to a similar size to the one in 2017. The commercials oppose them with a big short position. Okay, now it's not a timing tool, it's just warning you there could be a reversal. You have to use your technicals to manage the trade, time it, etc. But as a warning sign of a trend reversal, it's a great tool. And I think this big position here warns of a big reversal. Okay, so what we're going to do now is go over to the chart and draw levels of entry, stop and target. Chart of Euro USD, and we bottom out here at the 108 level, go up a little bit of sideways and a move to the upside that goes to 120. So basically 1,200 pips. Okay, now I think a substantial amount of that rise is going to be retraced, and we're in a period of what I would consider to be, in Dow terms, distribution here. I'll come back to what distribution is in a moment, but we looked at the COT net traders positions, and we did see the commercials heavily short. Why? Just written up some points. Just quickly go through them. The euro rallies on the rescue fund being approved in Eurozone, which was money for the poorer nations to help them overcome the pandemic. Now, we did say at the time we felt the rescue fund was too small to help the poorer nations, but the market relieved the rescue fund was approved, and the euro moved to the upside. Now, the euro has also moved to the upside on the potential the market believes for Eurozone economy to do better than the US going forward. That's not supported by facts in recent weeks at all. If we look at PMI data, leading indicators in terms of how the economy will do going forward, in Eurozone, they've come in below forecast, they're weak. Also, CPI inflation data points to deflation in the zone. That's a nightmare for any central bank, and the ECB have got to face up to deflation. What are they going to do? They can't do much in our view. They're doing stimulus, they've got negative rates, they've run out of tools. So Eurozone for us faces a recession going forward. It's got huge structural problems in terms of divisions between rich and poor. Nations like Italy, Spain, Greece and Portugal were not doing well before the pandemic came along, and the pandemic has really dealt them a harsh blow. The rescue fund cannot help them return to growth, and the market is looking for Eurozone to potentially return to growth next year. I saw an analyst from Deutsche Bank, and he made a good point. It's a fantasy. Take Eurozone years to recover. It will. So I think the market is too bullish on the zone. They're too bearish on the US as well, and the USD. US data, if you look at it, PMIs, for example, better than Eurozone. Also, the market believes that the virus will impact more on the US than on Eurozone going forward. That's not true either. We've seen virus cases falling in recent weeks in the US, but they're rising in Eurozone. Also, risk on helped the euro, but no impact now. In the last few weeks, stock markets have been strong, but the euro is just travelling sideways. If we were to get risk off, we had a couple of decent red candles towards the end of last week in the S&P 500. That would give the USD an additional boost, okay? But it's going to push the euro down even without risk off, in our view. Now, in terms of the way we've been playing this trade, we came up here, we sort of poked towards the 120 level. We thought, yeah, we wouldn't get through the 120 level. We get a red candle down, a blue, then we'll go short there, okay, through the 118 level. But look what happens. We come back up and poke at 120. Now our stop is at 120.30 in the member center. 120, a really difficult level to take out. And I think that could be the last push of the bulls. There was no buying volume above the 120 level. Speculators already heavily long. Now, in terms of this point over here, big trends can take time to reverse. So we've got to trade in, obviously, but we're kind of chopping sideways. We're not falling. So what we'll very often do when we trade sideways is basically we'll swing trade within a channel. Now, this channel is distribution in Dow terms. So you've got a market heavily bullish of the euro. They try and push it up, comes down. They try and push it up again, it comes down, traveling sideways in low volatility. You can see that by the tightness on the Bollinger Bands. So you kind of got market sentiments very bullish, but the euro can't really power higher. Prices distribution. It's a battle between bulls and bears, and we think the bears are going to win. There is the resistance level. When we came up towards the 120, we'll swing trade, okay? We'll put a trade in there and then take it out above support. So we can gain not much. We only gained 130 pips, but that will cushion us if we are stopped out, okay, on our core position. And yeah, if it goes up there again, I'll be looking for topping action into 120 and take a trade and take it out above support. What you don't want is to have, let's say, a trade in and get caught in what I call dead sideways equity, where your capital's in the market, but it's not really doing anything for you. If you do a core trade and a swing trade, it can help you overcome the problem. Now, obviously, we would resell if we went back up on topping confirmation, or we'll just take a break at the bottom of the channel. Okay. So we'll put another trade in if we break out and look for it to follow through. So in terms of, when you get sideways action, doing two trades, I think, is a good idea. Now, in terms of resistance, okay, you've got resistance there, already got three bodies as well. I've just drawn a trajectory in. First resistance is second resistance. We could poke at 120 again, but I think we would fail. So a position could go in if we go back to the top of the range, and we can also put a position in if we break out. Okay. Now, in terms of a target, where are we targeting? The COT net traders positions point to a substantial decline. This is the first major support, 112. So looking for 600 pips on the downside. Now, in terms of this level, long term, I think we could even overrun it. But if we got down to here, be very happy. You got about a 4-to-1 in terms of risk to reward. If we did break lower, our stop won't need to remain behind 120. We can bring it tight in behind this level here. Okay, but for now, I'm leaving it back there until we get the breakout, put an extra trade in. Yeah, if it doesn't follow through, I can always take it out. Go back to the top of the range, put a trade in, and it'll be very, very low risk trade. So Euro USD looking for the breakdown. I think prices are distributing. Your bulls are really trying to push harder. You look at the media. Media is still pretty bullish, or very bullish, of the euro, but not going higher. The technicals are warning of a correction. COT obviously giving us the sentiment behind the chart. We know, basically that speculators heavily long, looking for them to get run out on stop down to at least the 112 level. Right, let's go and take a look at the next pair, USD CHF COT net traders positions. Right, just on the COT net traders positions, just for anyone new to the positions, it's a Swiss foreign currency first on the COT. So we're looking at Swiss franc against the USD. We obviously trade the USD CHF. We put the chart the right way up in a moment. This is just to really see what smart money dealers are doing against speculators. Like I said, when we're looking at Euro USD, we're only looking for really big divergences, and we've got a really big one. Okay, speculators have their biggest long position in the Swiss franc for over 10 years. Commercials their biggest short position. That is warning of a rally in the USD. Right, let's go and take a look at the chart and draw levels of entry, stop, and USD CHF, and you can see a nice big move to the downside. Now we're traveling sideways in a channel, lower volatility. We are in a period of accumulation. Dow terms, that means you're looking for a move to the upside. Obviously, we just looked at distribution, but I think we're getting ready for a big move. I'll draw my levels in a moment. Now, in terms of commercials, why are they so long of the USD? I think the reasons are pretty clear. Swiss National Bank view the CHF as overbought. They're extremely concerned about Swiss franc strength, and they've said so. They want it down. Now, the OECD, an economic body, notes on a historical basis the Swiss franc's valuation is at an extreme. Okay, it's overbought everywhere. It's one of the most overbought currencies in the world. And the Swiss National Bank want a weaker currency. They do have negative rates in place, some money printing. They could cut rates even more negative. But in the short term, what they're going for is intervention options. You've seen them intervene to try and stop the Swiss franc strengthening over the last few weeks. And I think with that intervention and the fact that speculators are just so short the USD, we're going to break to the upside. Now, the Swiss National Bank, you've seen a bounce in the economy on leading indicators, but the bounce is weak. Okay, and Swiss National Bank obviously want to get the economy getting a little bit or getting stronger. They know it's heavily exposed to the Eurozone as well, but we think obviously Eurozone is not going to do well going forward. Swiss National Bank know they can help the economy by basically bringing the Swiss franc down, which I think they're determined to do. But speculators are so short anyway, it's not going to take really much to trigger a rally in this pair. And I think, the USD is just so oversold now, just generally a bounce or a rally is coming. Volatility in this pair in recent months is high historically as speculators have sold. And obviously we can see biggest speculative net short position USD for 10 years. Now, in terms of this pair, the way we've been trading it, we bounce from the 90 level, we put a long position in. Okay. I've drawn the support on the four bodies. Okay. the big support is 90. Okay, it's a round number, and I think, basically, if we poke at the round number again, just key off the round number on strength. If you're coming in fresh, we put one in off the round number, and we also added another one on Friday. Okay, so basically, I took the break of those. Sorry, two bodies, one tail, one tail, one tail. We go through, we come back a little bit. Okay, I've kept the position open. However, if we weaken a little bit or just hang around, I can take the position out and go for a break of the high. Okay, this moment in time I'm holding it. So sometimes you go for a breakout. It didn't follow through strongly. I've got the option to take it out just for a tiny loss, or I can hold. We'll see what happens on Monday. But if we get through this high again for fresh positions, I think this would be heavily bullish, and we should see short covering to the upside. And to just correct the oversold condition of the USD, it's 96. You can see really good risk to reward trade. But what you could do is, if we do break higher, okay, and you get nice blue, the stop could come up behind the trajectory. And let me just draw another level line in there. Okay, so you've got one body, two body, 3, 4, 5 lining up. Nice big blue. You could tuck your stop behind the double trend line. That would make the risk reward obviously even better. Obviously, it's got to get to our target. But I just really like the look of this trade setup. I think I said in the last video, I don't very often trade USD CHF because it's kind of a slow moving pair normally, but the recent higher volatility, the way the COT is and the way the technicals look, I really like it, and got a position in, or two positions, and we'll see what happens with it. But both decent trade setups in our view. Right, that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.